Joining us now to discuss BTC price is Eddy Gifford. He's a wealth advisor at Tactive. Hello there, Eddy. Great to have you this afternoon with us. So Bitcoin can't seem to decide whether it wants to stay above $20,000. What's going on?
Yeah, well, thank you for having me. I think that, we've got a couple of things that we're up against right now. Obviously, we've got the issue with the Fed. The Fed is very, very hawkish, and they're doing anything but backing down. And so the thought originally was, hey, we're going to have rates sit in like the 3 to 3.5 range. Now some are saying they're going to go to 4 or 5, and they're going to keep them there for a long time. So because of stuff like that, just generally speaking, people are looking for spots to liquidate. And when we look at the charts, when it comes to Bitcoin, really, we're kind of in a bearish phase from the standpoint that 50 period and 200 period moving averages, our price is below that on a daily, monthly, and weekly time frame. So really the level of support that we're watching right now is right around 18,900. If we can hold there and stay stable there, then there's definitely a potential move back up to like the 21,000 range. And if we can break through there, next resistance level is going to be around 23.5. And then from there, we're kind of off to the races. The thing that we have that we're up against, generally speaking, this has gone for crypto markets as well as stock markets, is that September is not typically a kind month to investors. So I would expect a lot of volatility this month. There's a lot of things that are going to come to fruition this month. And so at this point, the recommendation is stay patient, watch that level around like 18,900. If it does move below that, next level is around 16,000. And if it goes and breaks through that, then we're looking at 12,000. But if I would say 12,000 is an absolute buy. But at this point, really, we're just trying to remain patient and figure out where we're going from here.
Yeah, sure. Historically, September is indeed a historically bearish month. So the markets are down across the board, stocks, energy, currencies. Do you see Bitcoin ever decoupling from the markets, or it's pretty much following the macroeconomic picture?
I don't know if there's going to be a decoupling, but I haven't decided yet if it's crypto leading the markets or markets leading crypto, because what we've looked at over the last couple of months is, or what we've noticed is, when technology stocks are doing better, we tend to see altcoins doing better. And when the S&P 500 or the Dow Jones is doing better, we tend to see Bitcoin do better. And so, like Bitcoin is kind of the value play, I guess, when it comes to the crypto markets. But in the most recent slide, our models actually recommended exits from cryptocurrencies prior to the sell-off in the stock market, and we just had exits in our stocks yesterday. So you could almost make the argument that crypto is actually the leading indicator, not the other way around, especially more recently. And maybe that's just because it's a better gauge of risk, generally speaking. We'll figure that out as it goes, but it's going to take a lot more widespread adoption before it actually decouples. As of right now, it's still performing like an investment.
Interesting. So as a wealth advisor, what is the sentiment among your clients, in terms of buying or waiting until you said $12,000 would be the buy signal?
Well, I think right now, like clients in general, they're just fearful. We've seen inflation run hot. At most recent numbers were 8.5% year over year, and those numbers were down from 9.1%. But we got to remember that even if the Fed gets everything under control and we magically get back to that 2% figure that they're targeting, that's still going to be 2% more than the 8.5% that we're already at. So that's a 10% increase over a 2-year time period. And that's going to affect pocketbooks if wages and your other assets aren't keeping up. So I think that, from the standpoint of do I buy now or buy later, kind of almost it depends on the investor. But if you're looking for kind of a long-term hold and a believer in Bitcoin long-term, I would say it's a great time to be deploying some type of dollar cost averaging strategy over the next 6 months, where we're just kind of chunking some money in on a monthly basis. But if we're looking from the standpoint of, hey, we're going to like lump sum something in, I'm not saying wait till 12,000, but at least wait and see if we can hold at 18,900 before you jump in.
Mm-hmm. Also highly anticipated this month is the Ethereum Merge. What impact do you think that might have on Bitcoin and the crypto markets at large?
Well, I think that unfortunately, the initial impact could be kind of, I guess, the equivalent to like a bear market rally, because the merge could create some optimism around cryptocurrencies in general, which could cause prices to run up. But we still got to remember the long-term picture is pretty bleak right now, and a lot of things are not priced in, whether it's the crypto markets or the stock markets or anything there. So I think that if you're looking for a short-term play, that is potentially a buying opportunity, but you probably put a tight stop in there and have a predetermined type profit around like 21,000 in that situation.
Mm-hmm. We're also anticipating the next FOMC meeting in September. What do you think that will, in terms of the crypto markets, how will it impact going forward? Is the are the crypto markets now very much tied to what the Federal Reserve does?
It appears so at this point. I think that just like generally speaking, people are really kind of like holding cash as much as possible. I think that if we're 5 years from now and we are in a similar situation and adoption of cryptocurrencies was more widespread, I would expect maybe more of a decoupling or maybe even a flight to safety heading into something like this. But in the current market that we're in right now, I think that unfortunately the Fed is kind of driving the ship, so to speak. And at the end of the day, they really do want to decrease demand. And how you do that is you make everything else more expensive so that people can't buy it. And that's going to affect how much money can go into any type of investment, whether it's cryptocurrency, stock market, et cetera.